Hi guys, great to have you guys back. Lesson 3. Let's look into the difference between investing and speculating. Alright, welcome back to Lesson 3. Today we'll look at the key difference between investing and speculating. Before we begin, just a quick disclaimer. Right, so we feel that there's three main key differences between an investor and a speculator. And the first one is the way that both of them use logic. An investor will think through an investment very logically, and also in the way that they understand and analyze the fundamentals of a company. And they will, when they value the price of a company, they use logical assumptions and a valuation technique to come up with a proper price of value for a company. Whereas a speculator will just buy based on the feeling or a hunch, and they will buy a company just because the company stock price has been going up, and they will sell because the price has tanked and they started to panic. And so they have no idea why the price of a company is rising or falling, and they're just buying based on the feeling. So that's the way we separated an investor and a speculator. A good example would be, say, if a speculator buys into an oil and gas company, and he might feel that, this oil and gas company is going to hit on oil field, but there's no real evidence to support it, or maybe that's just rumor that he heard, and there's no real reason, and he has not done any analysis on how much that oil field, if discovered, will bring about value to the company, and he's just buying based on speculation. A second way we can see the difference between an investor and a speculator is how they look at risk. An investor, when looking at an investment, when he wants to invest in something, he will think on both the risk and the return. If I'm expecting this kind of return from this company, what are the risks I'm taking? He's very mindful of that, right? And he's very protective of the downside risk. Whereas on the speculator side, all they focus mostly on the upside of what you can do. Like we said before in the previous example, he's buying it that because the stock price is going up, so he will buy into it as well without thinking of what are the risks if he has bought into it. The last one is the time horizon. An investor will invest for the long term. He believes that if he invests in a great successful company or a growing company, that in the long run it will do well, right? For example, for myself, I have been investing for about 10 years, and I still continue to own some of the stocks that I have owned 10 years ago, and will continue to invest for the next 20 or 30 years if I'm still alive, right? But for a speculator, when he buy something, he's already thinking about when he should sell. He's impatient, and he want to look for short-term gain, buying and selling stocks maybe by the day or by the minute. Those are the key difference between an investor and a speculator. It's important for us to know the difference first between what's investing and speculating, so we don't fall into the trap when we're investing in the stock market, into the trap of becoming a speculator, because there's so many things happening within the stock market, and it can get very confusing, and it can get very enticing, especially in a stock market rally. And we have this fear of missing out, and that might push us to become a speculator without even knowing it. So it's very important for us to know the key difference before we even step into the stock market. Hi, my name is Stanley. I just want to thank you for watching our video. If you like it, do share with all your friends. And if you have not signed up for our course yet, do sign up down below and you'll get all the links to the write-up, to the PDF, and also to the videos. So get ready for next class. I'll see you then.